Achieving EM status for Vietnam is evidently another validation of the country's progress and economic development. It's like another approved seal that the country is accessible, is open, and adopts international best practices in a range of different areas. So basically, achieving EM status puts Vietnam firmly on the global stage and giving it access to a broader range of institutional investors that otherwise would have not invest if we were still at frontier market. So like at the Vietnam Equity Usage Fund, when we talk to potential investors, they like the Vietnam growth story, they like the usage structure, they like the fund, but it's still lacking one of the check boxes that it's not yet classified as EM. And going into 2026, this will undoubtedly be no longer an issue. In terms of the positives for an EM, as you mentioned earlier, expecting significant inflow for the country on the passive side, analysts are putting it around $500 million to $1 billion on the projected weight of 0.3 to 0.5 within the FTSE EM index tracking ETFs and funds. On the active side, it's much larger, ranging somewhat from 2.5 to 7.5 billion on the basis that active EM funds typically manage a lot more assets. So one plus point definitely flows. Another one would be new source capital for Vietnam's economic engine. So the government has been very committed to economic growth, targeting GDP per capita of 7,500 by 2030 from the current 5,000. And to power that growth engine, we will definitely could use new sources of capital to expand businesses, to launch them to new heights. So with the EM upgrade, we're hoping that more and more investors will be able to come into the country. And two things, yeah.
Yeah, all sounds very positive, Mai. So I want to ask you, though, we were showing folks a chart a couple of seconds ago, and maybe it'd be useful to bring it back, right? VNI, Vietnam Index, over the last 12 months is up almost 33%. How much of this has been foreign money, and how much of it has been domestic retail money? I'm curious.
This is basically all local money. The Vietnamese people have shown an increasing interest in investment in stocks since COVID, when everyone was at home and they didn't know what to do. And in terms of investability, the size of the market is becoming much and much larger. So average daily turnover now is more than 1 billion. In the past month, everyone was in anticipation of the EM upgrade, so it's actually up 2 billion. So the majority of the driver for the market's growth this year is actually local money, not foreign money. Foreign investors are still on a net sale basis, especially with the U.S. tariff hitting Vietnam in April. That news wasn't exactly great, so everyone was kind of holding back and see how things will become. So purely local investors coming in.
Interesting. Okay, so the FTSE Russell move would basically open the door for big foreign institutional money, real money accounts. So I think that's something the market and yourself are looking forward to. The timing of it, though, and tell me what you think. Are you assuming that this trend of weak dollar is going to continue? Because if true, that is yet another reason, I think, for foreign money to like the Vietnamese market and to be attracted by it. No?
Definitely. I mean, I think you got straight to the point. Over the past 3 years or so, we've had foreign outflow of almost 10 billion out of Vietnam, purely on the basis that, going directly to the US would be, with the Fed rates up quite high, would be optimal and a no-brainer there. So, but now, should the tides turn and the Fed rates come down, the dollar is down a little bit, then, if money is to move and look for other attractive, high growth, high potential markets, Vietnam would definitely be one of them. So in terms of timing, this is actually very good timing.